Welcome to another edition of AML Conversations. I'm John Byrne with AML Right Source, and with me today, very pleased to have Bob Simpson. Bob runs his own business called Daylight AML. We'll talk a bit about his career work in a little while, but I want to start off before we jump into this to say Bob's going to talk a lot about the mortgage space, mortgage fraud, AML, or money laundering in the mortgage space. And I just want to say that that's an area that I don't think gets enough attention. And Bob and I first became acquainted with one another when I was reading some of his work. And, you know, fraud is broad-based. Everybody's aware of fraud. But I think the mortgage fraud space, outside of what oligarchs do and buying houses with cash, I don't think we pay enough attention. So Bob's going to elucidate all of us today. So, Bob, thank you, first of all, for taking the time. I really, really appreciate it.
Happy to be here.
So let's start with this. Some of the things that are going on with this administration in terms of regulation, potential legislation, that sort of thing can impact this. But why don't you start us off with why is mortgage fraud such a major issue? We know there's a housing crisis. We know there's falsification of documents, that sort of thing. We know there's straw buyers, but tell us why it's so important that both financial institution professionals and advisors and counsel understand this space so they can do a better job of detection, reporting, and hopefully prevention.
All right. To sort of level set the whole thing, it's important to realize that real estate internationally is one of the favored ways of laundering money. It's the big dog. When you're talking to financial intelligence units around the world, they're concerned about the transfer of money. I mean, we all know Breaking Bad and Walt having to wash cars. It's going to take a lot of cars to wash $1 million, but it's not going to take a lot of houses and a lot of real estate. So real estate's a favored son internationally to launder. Well, the way that anti-money laundering laws developed in the United States, money laundering wasn't even illegal until 1986. And then it was imposed upon mortgage lenders, non-bank mortgage lenders, back in 2012. So what have we been 13 years now in the mortgage world where we're governed by the BSA AML regulations. And one of the things that you've got to report when you're running an effective BSA department is fraud, and mortgage fraud lands squarely in the middle of what you've got to be concerned with. So that's, if you're in the mortgage business and listening to this, this is why this pertains to you. For 12, 13 years now, you are in the arena with the BSA AML regs, and you've got to do what you can to prevent and report on fraud.
Give us some examples of typologies in this space. Like I said, obviously I'm aware straw buyers, and, we have inflated appraisals, that sort of thing. But give us some examples of how this works. Again, you spent your career looking for these sorts of things. So talk a little bit about some of the examples that are still problematic today.
Sure. I ran for 25 years the largest mortgage fraud investigation company in the country, and we saw all stripes. We saw every kind of fraud. In the money laundering space, the easiest example I can get out there for people to understand, here's how it can affect you. If I wanted to launder $500,000, I could buy a junky property and put $500,000 cash into improvements, blow out walls, add rooms, redo everything, make it a real little gem when it started out as junk. And it's not hard to find contractors who will work for cash. So when I have fixed up that junky little property with $500,000, I can either sell it and that money's clean then, or I can maybe take a cash out refinance from you, the lender. I'll just go in and get my cash out. And as soon as that wire hits my account, that's pretty much cleaned money because it's so obfuscated at that point. No one's going to know which improvements you paid with what money. And if you have $10 million to launder, well, just do more houses. It's really an effective way for somebody to clean a bunch of money pretty quickly.
What sorts of criminals use mortgage-related issues for money laundering? Is it Is it individuals? Is it companies? Is it transnational organized? Just give us sort of the waterfront of who uses the things that you just described.
Sure. What you've got is an ability to take the rules of our system and bend them for nefarious purposes. We get all agitated in this industry about occupancy misrep. We give preferred rates, lower down payments. We help people when they're going to occupy the property themselves. So there's a motivation for people to misrepresent that they're going to actually live in a property, and it causes headaches for lenders, the correspondents, investors, insurers when somebody's lied about their occupancy. Well, one of the things that happens when you see occupancy misrep is you can find grow houses. You can find that you've got marijuana farms in a house that you thought was going to be owner occupied. And so we kind of chuckle at the big problem we make out of occupancy sometimes, but it can be the tip of the iceberg for human trafficking, drug trafficking, and actually grow houses.
The issue of purchases by cash, which obviously not only is on the rise, has been going on for years. We know that FinCEN has these geographic targeting orders in certain regions of the country, New York, LA, Miami, I think even San Antonio. Tell us why, again, if you're fortunate enough and you have enough funds and you can purchase a house with cash, a check, whatever, that's not automatically a bad thing. But why is that, or is that considered a high risk transaction? Because it's happening a lot more now, at least I think so. You would know better than I, when it was, say, 20 years ago. And I would wonder, as a lender, obviously you're not getting the finance charges, but they are paying for the house. Walk us through that, like buying property in cash. What are the challenges for compliance officers, AML investigators, to figure that out?
Sure. If you want to have a really enjoyable 30 minutes, get on YouTube sometime and find some of the BBC has some good shows on Londongrad, on the amount of dirty cash that came into London following the collapse of the Soviet Union. London, England did not go kicking and screaming into this. They loved it. They loved all that money coming in. Yeah. Buying up houses in the posh areas like Kensington and Belgravia and all this Russian money came in, and it distorts values. It is the statistics on the number of properties that were bought anonymously in London was huge. It became known as Londongrad, right? Well, New York had a similar problem with all those little tiny spires that went up. Fifth Avenue had a bunch of them. Central Park South has got one, and all these ultra luxury apartments that went up in New York. The numbers of those that were bought anonymously through just layered corporations was really astounding. And so it distorts markets. It unlevels a playing field. And so there is a societal interest in making sure that transactions for real estate are done at some sort of supply and demand equilibrium. And those cash transactions throw that all out of whack, and it can hire some really dirty, ugly money.
So that reminds me of the issue that we planned to talk about before we jumped on this, and that's the recent decision in this administration to eliminate in the Corporate Transparency Act the beneficial ownership information gathering requirements for domestic entities to have to provide information. I've seen some groups like the FACT Coalition, Transparency International, and they've all said this is going to open up the floodgates for oligarchs and others to do even more of what you just described has happened in New York. What are your concerns as an AML professional with obviously now the lack of enforcement for beneficial ownership information, knowing that banks still have the CDD requirement, but obviously this was a requirement on entities to file directly with FinCEN. That's no longer the case unless it's foreign, but I would imagine some of those foreign entities could go in the back door, with a domestic entity and not have to file as well. So what are your thoughts on that? I know you've been pretty prolific in your comments publicly about this.
Yeah, it raises a number of issues. The first issue I want to raise is that we don't live alone. We live in a world community. There are other nations that are trying to battle money laundering. And if you spend any time at all reading pronouncements of the Financial Action Task Force or other FIUs around the world, this idea of shell companies is just on everybody's list. We got to battle this anonymous purchase of real estate. Different countries get different grades for how well they do. I think it was Ireland. They got super high marks for the transparency of their real estate transactions. Why? Because their database is complete and it's free. Well, France got pretty good grades as well. They have the same database, but you have to pay for it. So they got a little lower grade on the transparency of their real estate transactions. We just decided as a nation, well, we're not playing. We're not doing that. And the whole world kind of record scratches with that and says, wait a minute, we're all trying to prevent shell companies from, shuffling around different oligarchs' money. And the U.S. just said, we're not playing. Except they didn't quite say that. They said, well, not required of domestic companies. Foreign companies still have to. It's this endemic sort of hostility to anything foreign, I think we're seeing. We're not going to require it of U.S. companies, but foreign companies are still going to have to disclose. Now, the thing I tell people when I'm training this is that you have to please separate the fact this is the Corporate Transparency Act we're talking about, the CTA. That is not the 1970 BSA legislation. We have different rules that govern us for BSA. So the fact that we have said the CTA doesn't need that information does nothing to obviate your duty to know who you're doing with. And so you can't do business with people on the SDN list. You still have that obligation that's still in force for the time being.
Right. And as we talked about earlier, too, the customer due diligence regs that were finalized in May of 2018 require the banks to capture that information. But the challenge now is that individual or entities won't be filing that information. So it's up to the bank to do the KYC, to do the due diligence. But it's the same challenge that they've had before. That is, how do they know that they've done enough? What happens if they don't, check the right boxes, if you will? So it's gonna be a challenge. So getting rid of domestic entities coverage under the CTA, it's a problem, but still the problem is something banks have to navigate because they still, as you just said, they have to make sure that they're not doing business with criminals, because who are they going to come after? They, meaning law enforcement, a prosecutor, come after the banks. Yeah.
So the commentary in the rulemaking procedure, a lot of the commentary was, well, it's so intrusive, I don't want to file my beneficial ownership information report. It's too intrusive. Well, sort of the retort to that is, yeah, I don't really care if you want to tell me. I'm not doing business with you unless I know who owns your company. So if you are responsible for that at an institution listening to this, sure, maybe they don't have to disclose it, but you better have some red flags fly if somebody is trying to hide who the owner is of a company that you're working with.
Right. So the small business community has said how devastating this is. You and I both have LLCs. Took me 10 minutes to file. So
10 minutes.
Yeah, I think that's crazy. So the obvious challenge for mortgage lenders then is the lack of all appropriate data to make decisions. So that becomes, I assume, for your client base, even more of a challenge, because at least even if the registry was incomplete or had problems or the access issues were such, which there was some of that, there's no question. I always felt that the notion that you have to get permission to access it from your customer was a kind of a silly part of that regulation. But let's say they had figured that all out, but the lack of access completely now, because you're not going to have it, I assume is going to be a challenge to your mortgage fraud prevention folks that are in these companies. So from a practical standpoint, this is a bad move. Law enforcement was opposed to this change as well, I might add, but I would think those that needed the information to make good decisions are now going to be potentially harmed from not having that access.
I think that it's not unreasonable at all if you're responsible for the CDD at a bank or mortgage company to just have a policy. If we can't verify who's working here, we're not doing business with you, and just shut it down. Mortgage industry has some weird kind of problems with CDD, though, that other people don't. Put yourself in this situation. A dishonest real estate agent comes to your mortgage loan officer and is encouraging them to falsify some income docs to get a deal through. Well, your loan officer is not comfortable with that and tells them, no, I'm not doing that. Well, 2 months later, that same real estate agent is back at a different loan officer at your company, encouraging them to get some other loan funded. That realtor technically, probably legally isn't your customer,
Right.
but it's a risk. It's a risk to you. And if your job is to assess risks, do you want to institute some sort of report card among your referral sources for the people who are sending you business? Are you exposed if you have another realtor like that guy sending you business? It's probably not technically your duty under CDD, but I do think it's probably your duty under your risk assessment.
Right. That makes sense. You had mentioned FATF, and we're going to talk a little bit toward the end of this about AI and its ability as a tool for investigators. But the FATF question is interesting because, as we alluded to, countries get mutually evaluated. The U.S. is under that evaluation right now as we speak. The final report will be done in 2026, and one of the factors is where are they with beneficial ownership? That was a criticism that the U.S. received in 2006, and it took them a long time to finally get the regs, CDD first and the CTA second. So they were going to get, I won't say high marks, but they were obviously going to be compliant with what FATF believes is a big gap. Now that that's not the case, and some of the other things, the pausing of the Foreign Corrupt Practices Act, there's other potential changes to the AML infrastructure that are being considered right now that we hear from folks that we know on the Hill or in the agencies. So one of the things that FATF does when the evaluation process, they put you on a gray list. I'll let you describe. But since we're going to also talk about AI, I told you right before we jumped on, just for the heck of it, I went on one of these AI products and typed in what are the chances or how, what are the chances that the U.S. gets placed on the gray list by FATF? And the response was the U.S. gray listing, there's no indication at a risk of being gray listed. So I've written this going, no risk at all. And they listed some of the items that are not included, but that was, with that particular AI product that I looked at, they only showed two sources. Because at the bottom of at least most of these, they show you sort of the source material that they use to answer the question. So I think in a perfect world, not advocating the U.S. get gray listed, but it would be a possibility. So forget about what AI said. I wanted to start with that. What you've written about this, what are your concerns, both as an AML professional and based on what's been going on since January?
It's quite a thing. Okay, so let's first make sure everybody's clear. The FATF is a voluntary Paris-based organization that's all the non-rogue players. We're all here. We're all trying to be good corporate citizens, right? And the FATF came out with 40 recommendations, plus 9, I guess, eventually after that are terrorism related. But they came out with 40 recommendations to be a good neighbor. Cooperate with other jurisdictions, have CDD in place, file SARs. 40 of them, right?
Right.
And 2 of them, I think 22 and 23, pertain to beneficial owners. And they say you can't have shell companies. Let's just summarize. All the legalese goes, we don't want anonymous real estate transactions. So beneficial ownership information reports were how we were going to engage with the world and be nice and disclose who owns property. So since you have a grid that's 40 lines deep and then you get graded. What you don't want is an NC rating, which is non-compliant, and then the best is a C, which is compliant. And what are the other ones, John? You got
Largely compliant.
largely compliant, right? I wrote that it's you're overweight, but you're on a diet. It's you're trying. Okay, you got a good heart, and you're trying to do better. We see the whole world's grades. Everybody who is out there has a grade in one of those categories. And you look and you say, oh, why did Cayman Islands end up on the good list, then on the gray list, then back on the good list again? What did they do? What was going on in Cayman that would allow them to redeem themselves after ending up on that gray list? So everybody's got a grade. We got a grade too. And we're on that grid too. And it's kind of weird to think that we might be in a position where we have to defend our grade and say, no, we're fine. We deserve this passing grade. Well, wait a minute. We down here in Ecuador, we got a bad grade and we're doing better than you on 14 of the scores. That's the weird situation we're in right now. And your AI said, no, we're not going to judge the U.S. too harshly. But I think I agree with that, John. I think I agree we wouldn't end up on the gray.
Right.
But isn't it sad that it's even a close call?
I agree. Yeah, I think that's the part. So sticking with the AI topic, one of the things that you've talked about is the use of AI as an investigative tool. In fact, in the class that I teach at George Mason, I had Don Fort. Don is former IRS CI chief. And he also talked about, not from a mortgage fraud standpoint, but just in general, that AI has become a very useful investigative tool. Talk about that and where you see this all going.
So let me say that I wrote that piece I think you're referring to because Bill Pulte, the head of FHFA, Fannie and Freddie, had pronounced that he's going to team up with Palantir, which is, they advertise themselves. They don't advertise themselves. They describe themselves on their website as we get the right data to the right people to make decisions. And they have contracts with all of the super secret agencies that you would expect. So they're going to team up and they're going to find misrep. And I wrote about, well, what the most common misrep I think they're going to find these days, if it's not income, it's going to be occupancy of the properties. And I highlight that because there are problems with occupancy in a file, it's not as benign as it sounds. You have investors that bought that loan hoping for a certain LTV, a certain interest rate. Insurance is based on whether you occupy the property or not. So when you upset that apple cart, when you are discovered to have misrepped your occupancy, investors are involved. The rewriting loans could be involved. It can be a real mess. All right. If Palantir and Pulte and Fannie Mae are using that technology to find all of the indicia that somebody doesn't live there, man, you could do that fast and you could be real effective at it. You could use AI to get in and find out where somebody lives, works, goes to school, fills their car up, ATMs they access. I mean, if you're really going full AI and trying to find indications that somebody doesn't live there, you're going to scan their social media. Where are they taking most of their pictures? Where's the geolocation on pictures they post? You're going to be able to find it. And my thought was, be careful what you wish for, because what if you go from Monday morning showing up at your office to Monday afternoon finding out you have 175 files that have a problem with the occupancy? That is going to change your work week, something terrible. So kind of like you have a whole batch of loans that are performing. Is that a sleeping dog you want to let lie? Or do you really want to get in and find out that you've got 260 loans this week where there's misrepped occupancy? It begs the question, and I don't know what the answer is, but I know the point I'm making is that AI is terribly powerful, and it can find things that might take your investigator all afternoon to find, it can find in 10 seconds.
Yeah, it's going to be fascinating to watch this play out, as it were. Thank you for doing this. I'm going to get you out of here on this question, two-parter. One is, where can people get a hold of you? I would say people should look for you on LinkedIn. You post some very interesting things. And then secondly, besides where people can connect with you, what are some of the emerging threats beyond what we've just talked about that you see coming up in the next couple of years? So where can they find you? And then what are you warning your clients about right now?
All right. So where you can find me is Daylight AML. All my contact information is there. I specialize in the training and in BSA audits. So what I am telling my clients to look out for is, in down markets, fraud proliferates. People have car payments, credit cards, cars they need to pay. And where things might have just been a decline 2 years ago, people are going to be working to get loans funded that shouldn't otherwise be funded. And that AI that we were just mentioning, it can cut both ways. So people can get really good, really efficient about some of the deceptions that they're going to create. So there are certain misreps, there are certain problems that are going to be more prevalent now than might have been in the past. And they may relate to appraisals, because we may well have chugged over the top of that hill. We may be coming down on the value side. And I think we've certainly tapped out the majority of qualified borrowers. So what's going to happen to make the unqualified qualified? I think that's the challenge most mortgage lenders are going to face in the next 18 months.
And we both certainly saw that in 2007, 2008, in spades, as they say.
Spades.
Bob Simpson, thank you so much for your time. So as I said, folks need to connect with you on LinkedIn. You provide a wealth of information. Thanks for your thoughts. And hopefully we won't have to come back next year and talk about the greatest of the United States. Hopefully that won't be the case.
Thank you, John.